in March, as I said, there were certain actions we took on the inventory side, where if you see the inventory levels have significantly gone up almost to 90 crores plus. So that has also impacted. So a fair assumption on year end, I think we would be following these kind of cycles. We should be at about 90 days kind of number.
90 days should be where we now stabilize.
So,
yes.
Sanjay ji, to add to what Kiranji said, Rossari standalone, we are practically at par as per last year. It was 67 days and it is 69 days. And just 2 days also, I think it was little because goods in transit were a little higher than last quarter.
It used to be 45 days when we were at the IPO.
But now this is a new normal because, our customer mix, our product mix has changed substantially as we have informed you.
So now say standalone 65 and console 90 is what?
Standalone 70.
Okay, 70. So that should be a new normal, right? So that from here onwards, there won't be a significant, because this year there is lower cash conversion because of the working capital.
Yeah.
So from next year onwards, that should not be any more the case, correct?
No. Our endeavor, Sanjay, internally is to bring it down to below 85 days. That's on a realistic, giving you a realistic number. But currently, given the situation, I think we have to first bring it down to 90 days from where we are. So it would be prudent now to take a 90-day kind of a cycle.
Got it. One last, sorry, I'm stretching a bit, but one last question from my side. We anticipated to double the AHN revenue this year. I don't think that's been possible. Any particular reason what we saw the opportunity at the start of the year and what transpired across the year and finally we ended up with not much different than what we were last year?
Last year we were not prepared for the agro season, and then April we had ethylene oxide shortage. This year I think close to 20 crores of stock is for agro which we have kept now.
No, sir, I am talking in AHN.
आप क्वेश्चन क्या पूछे संजय जी?
सर आपने ना लास्ट ईयर कॉल में 4Q के कॉल में बोला था कि you expect the AHN revenue to double.
Yes.
Okay, I don't think we were able to do that. What changed over the year for us being not able to do that? Because I think we were very confident of doing that.
The last few quarters in animal and nutrition industry, especially the integrated and the feed mills, have gone through a lot of pain. They have had a lot of pressure on their margins, and our outstandings, were going up. And then prudently we decided that धंधा नहीं आएगा तो चलेगा. We are not going to give extended credit in the market for animals and nutrition.
Okay, you're telling the industry itself struggled and we were more careful not to increase the exposure in the industry.
Yeah.
Assumption?
Yes, that's what it was, Sanjay. But if you see in the last 2 quarters, we've slightly bettered on the AHN front, and we are also now putting up a small capex in AHN premix, which will help us.
The premix plant. We are putting up a premix plant and we are putting up a granulation facility. These two piece of equipment will, increase our production capacity as well as the quality of our products. So we currently use standalone mixers, but this will be a completely automated mixing technology from a multinational company. So this investment, we see that this year we should bounce back. Although this machinery takes anywhere between 4 and 6 months for delivery and installation. So we are very hopeful that with these two equipment in place, we will do better there. And as well as aqua is also being seeded, so this year aqua business also should go up.
Thank you, sir. Thank you. That's fairly detailed. Appreciate all the answers and best of luck for coming quarters.
Thank you.
Thank you. Next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead. Yeah. Good evening, and thanks for the opportunity. So first question is, we have recently commercialized some oil field chemicals. So if you can just give us a broader understanding of where these are used, which geographies, whether it's a tender business or, it's a normal business, and how are we going to tap this particular opportunity in terms of opportunity size and maybe a growth plan for a 3 to 5 year perspective? Thank you.
Yeah. So the oil field chemicals, we are targeting both India market and also especially the Gulf market. There is also some market in Africa and Malaysia, which we are trying to target. Oil and gas has a long gestation for approvals from the big companies. So this year would mostly go into seeding. The chemistries where we are focusing is mostly the demulsifiers, the 4-point depressants, the biocides, the defoamers. These are chemistries where we have some small sales from Unitop. So this year would be more approval and seeding stage, and hopefully in the years to come we should get good business from these chemistries and these focus areas. Obviously Saudi, UAE, Oman, Kuwait, Qatar, Nigeria, and India, and also Russia. These would be focus areas for us.
Sure, that's helpful. The second question is in terms of our, overseas market. So how are we tapping the exports market? You talked about textile chemicals in terms of our Bangladesh initiative. Apart from that, Unitop has been pretty concentrated on the LATAM market. TriStar has been on North American market. So where are we in terms of cross-selling opportunities and dealer distribution network? And how are we expecting the exports to grow in FY25, 26? What could be the proportion that we are looking at maybe over a 3-5 year period of time? Thank you.
Yeah. So, Rohitji, the focus would be the Americas, which include Latin and South and North America. This is one of our focus areas for growth. The second area, of course, would be Asia. And Asia will include the MENA region, which we consider is still in Asia, and also the Far East region, which is there. And the third geography, which we will look in exports, remains the European geography. So Latin America is part of the Americas, which we already done. The home personal care segment, the agro segment, would be this year the focus areas mostly. If you see in the last financial year, Rossari, Unitop, and TriStar, we were practically, together, the three companies, we are at zero debt levels, nearly net zero. The investments and the bank borrowings in these three companies were matching, so there is practically no debt in these three companies. And TriStar and Unitop both have achieved 100% capacities. So this has mostly come from also the export market, but also seeding into the local market, where we have cross-sold, did the cross-selling into our existing customers with new chemistries. In terms of specific products, phenoxyethanol would be something which could grow, but also we see a lot of alcohol ethoxylates and other kind of ethoxylates going into not only home personal care but also food processing, and then we are starting to build our capabilities for the pharma surfactants, so which again will come in the HPPC segment as in the performance chemicals.
Right, sir. Got it. Just one last, if I can squeeze in. From the agrochemical exposure, it's 50% only in Unitop, and there is no other exposure that we currently have, right?
No, it's all at Unitop.
Right. And how has been the performance in the recent quarter? And given that this is the primary season from agrochemical perspective, what is your expecting that whether we will be able to maintain the volumes during this year as well, or there could be some setback? Thank you.
I didn't get your question clearly, Rohit. Can you just repeat, please?
Yeah. So given that last year we were able to maintain the volumes on the agrochemical, obviously there was some impact probably because of the pricing. How do we are seeing in current environment where last year the inventories were higher generally across the board? So from a FY25 perspective, whether we have a visibility that agrochem part, the volumes will be maintained or there could be a smaller setback?
No, we kind of order book that we are seeing now, I think we should be able to maintain our volumes in FY25. We have at least now a good bit of inquiry coming in from our customers. So we don't expect the volumes to drop significantly. We would be happy if we can maintain the volume levels that we've achieved in FY24. We should be around that number itself.
Yeah, that's helpful. Thank you and Mr. Sir.
Thanks, sir.
Thank you. Before we move to the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1. Next question is from the line of Mihir Damania from Ambit Asset Management. Please go ahead.
Yeah, hi. I just have one question. What was the volume growth for the full year for the company? And do we have sufficient capacities to increase the volumes for FY25 in a similar range what we did this year?
We generally don't give a volume growth number, but given that the current pressure on the prices and some of the selling prices having softened, most of this growth which you're seeing that has majorly come out of volume itself. And on your question on the availability of capacities, I think on the standalone front, we have enough headroom to fill up volumes. The ethoxylation capacities at Tristar and Unitop are fully utilized, so that's where we are adding capacities. We should have some capacities on stream, as I said, by end of H1.
Got it. Thank you.
Thank you. Next question is from the line of Rohan Gupta from Nuvama Institutional Equities. Please proceed.
Yeah, hi sir. Good evening and thanks for the opportunity. I just wanted to understand that you mentioned that definitely last year agri has been a tough, however the growth was driven by HPC and other personal care category. How do you see that over next 1 year to 2 years, where the focus on HPC has been there and it will be remain the growth driver, or the industry revival in agri business will drive the agri part of the portfolio of the company more?
For us, home personal care and performance chemicals would be the growth driver definitely in the next few years. Agro, we see still, if you're able to maintain the volumes over last year, we would be happy. There is no El Nino effect and the monsoon is expected to be normal. So we see a normal, agro season like last year. But the focus would be on all the ethoxylates business basically and the phenoxyethanol business.
Sir, if you can just share some capex number that over next 1 year to 2 years, how much money you plan to invest, and a broader outlook that how much of that will go in agro and how much of that in non-agro or HPC.
So we've just in Q2 we had planned for some capex. It was about 128 odd crores for the ethoxylation capacity expansion and for a new molecule for the oil and gas business. So part of that 128 is for the oil and gas molecule. So that's the non-agro part. And within the ethoxylation, the capacities will be a mix. The utilization will be a mix of both agro and non-agro, depending on how the market moves. So if the agro season in the next couple of years the agro doesn't really grow, then we have enough headroom to keep growing our non-agro. So ethoxylates are actually fungible depending on how the markets are. So they could be agro as well as non-agro.
So apart from that, this capex, you have any further plan on the capex side? I think that this is going to commission FY25 itself, right?
Yeah. So by end of FY25, this capex will be done. Then probably we'll see how the markets are looking, and post that we'll probably think of the next round of investments. But currently, the major investments are the ones which we've announced.
So just last question from my side, sir. In last 2 years of the company, 2 to 3 years of the company history, we have seen a couple of acquisitions done by the company probably. At that time, I think the industry dynamics were quite rosy and in terms of the valuations also probably that the market dynamics was quite favorable for the companies in terms of the valuation which we have paid a high multiple maybe. Do you think that in the current scenario, the things have changed and even the acquisitions which we have done are, not contributing to the profitability the way we would have expected? And how much time you think that they may take to drive the profitability at the level which we have expected earlier?
No, I think on the contrary, both the acquisitions that we've done have fared much better than what we had planned. So whatever financials we had prepared at the time of acquisition, I think both these have really done much better than that. Today, if you see in the last 3 years, Unitop has had a growth of almost CAGR 20%, TriStar has had a growth of 24% CAGR. So I think we are very happy with the way both these acquisitions have performed, and they are going to pay back much earlier than what we had internally targeted.
Okay, so that's it from my side. Thank you so much.
Thank you. Next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. My apologies, I joined the call a bit late. So if there is any repetition, my apologies there. First question, on the overall growth outlook. Now, if I look at on a consolidated basis, we have grown at a low double-digit numbers over the last 2 years. Obviously, there was a realization-led, issue here as well. So large part of this growth was volume-led. But how are your thoughts in terms of, the revenue ramp-up here over the next 2 to 3 years?
Namaste, Ankurji. This is Sunil Chari here. Because of the uncertain, volatile market conditions across the globe, we are not sure and do not want to hazard any guess for the next 2 quarters. So we would wait and see and then, guide you on.
Sorry, my question was not on 2 quarters, but more from the next 2 to 3 years.
Yeah. So we are expanding, we are investing money into, growing the ethoxylates business, the phenoxyethanol business, the NMMO business, and also the polymers business. So definitely we are bullish on our future. But this first 2 quarters would determine, our outlook for the current financial year.
So just to add to that, Ankur, the capacities that we are putting in will probably come towards the end of this calendar year. So we would have about 3 to 4 months of revenues coming in this year, and probably a larger piece of the revenues coming in FY26. So currently, as Chari sir said, let us just wait and watch how these 2 quarters go. These are key quarters for us for our agro business. While we are seeing the demand being quite stable, but on a full annualized basis, we would probably be able to give a better idea of how this year is going to pan out. But currently, the way we look FY25, we should be a little similar or slightly higher than what we've done in the last year. But in FY26, I think the ramp up, the capacities coming in, we should see a mid to a slightly higher growth in 26 and onwards.
Sure, Chetan bhai. You did mention in your earlier comments that, on the standalone side, we have ample capacity to scale up. How about the capacity at TriStar or, Unitop? Will we have to spend more there to enhance capacity, or they are optimally utilized now?
No, so currently on the ethoxylation side, we are optimally utilized. That's why we are adding these capacities on the ethoxylation front. So our capex, which is ongoing, is going to add these capacities. And apart from the ethoxylation, we are also doing another product for the oil and gas business. So these are the two main expansions that are happening.
Sure. Secondly, on the margins front, now if I dissect our consolidated performance between standalone and subsidiary, there is an improvement in subsidiary and to an extent deterioration in the gross margins or even EBITDA margins at the standalone side. Is large part of this pain largely over, or the FY24 numbers on an average is the new base and one should look at these numbers? May not be the 14-15% EBITDA margin that we were doing earlier.
So currently, yes, Ankur, I had spoken about this earlier also. We would, the current base, what we are seeing for this, for the FY24, at least for the next year, we should take those numbers itself and go ahead.
Okay, but incrementally, let's say 26 and beyond, you will expect things to improve, or it should be gradual and not going back to the older run rates?
In terms of the gross margins?
Gross or EBITDA margin, either ways.
Yeah, it is going to be a gradual uptick, but on an annualized basis, I'm saying, if you see, currently we are seeing the way the business and the outlook that we are getting from the market and from the business side, this 13.5 to 14% EBITDA margin is what I can tell you is something we are looking at least currently sitting today.
Sure. And lastly, on the balance sheet, working capital, if I look at over the last 3 years, there is a decline in overall the core working capital, largely because of the payable days being lower. So probably we are doing more spot purchases now versus the credit that we were enjoying earlier. And FY24 specifically, inventory and receivables are also slightly higher. So how do you look at this number on a steady state basis going ahead?
Yeah, so if you see the way our business has grown in the last 2-3 years, with major growth coming in, our subsidiaries, Unitop, TriStar, almost close to doubling from what we have when we had purchased. So that's what has skewed the working capital position. Because there, if you see, the major raw material that we are purchasing is all on advanced terms, while if you see supplies to agro and also in the non-agro, especially in the agro, are hugely stretched, especially given the current scenario. So that's what is impacting the working capital cycle in the overall consolidated balance sheet. As I said, our endeavor is to start streamlining this number. We are working towards that. In March of 24, it was a management call to build up some stocks. Seeing the agro season coming in, we had lost out on a lot of agro orders last year because of non-availability of material. Also, the supplier of EO had planned to get into an annual shutdown during the month of April. Hence, we had willingly stocked up raw materials and also produced a lot of semi-finished goods and kept. So that's why you'll see the inventories have also gone up significantly in end of March. So that's what has impacted the overall working capital.
Sure, Ketan, that's helpful. Thank you and all the best.
Thanks.
Thank you. We have our next follow-up question from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah. So just one clarification. We have seen that there has been some issue in terms of ethylene oxide availability. So your comments on the same. And second thing, in terms of the newer capacity, how are we placed in terms of the supplies of ethylene oxide?
For April and May, Reliance has given us a forecast that they will be giving us about 60% of what we normally buy. So, April and May, we should have, of course, our capacities will be unutilized to that extent. And we are expecting to add some production of propylene oxide to tide over the ethylene oxide shortage. We are also trying to make some raw materials which we are buying from outside in-house to fill up the capacity which is vacant. In April and May, luckily we have built up some stocks in March for the agro, and I think our sales should be in line and stable, should not be affected much. That is what is our outlook, Rohitji, on ethylene oxide.
Yeah. And for the new capacity, I mean, are we comfortable that for the expanded capacity, we'll be able to get additional?
Yes. We have been assured by Reliance that, for our expanded capacity, they are going in for an expansion also for ethylene oxide. So we should have adequate availability of ethylene oxide for our expansion once it comes online in the last quarter of this financial year.
Yes, sir. Thanks. That's it from my side. And all the best.
Thank you, Rohitji.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. As there are no further questions, I would now like to hand the conference over to the management for the closing comments.
Yeah. Thank you, everyone. I hope we have been able to answer all your questions satisfactorily. Should you need any further clarifications or would like to know more about the company, please feel free to contact our team or CDR India. Thank you once again for taking the time to join us on this call. Have a good day.
Thank you. On behalf of Rossari Biotech Ltd, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.